All right. Hello, everyone. My name is Andre McClennan, and today I have one of the best investors out there, Adrian. He's going to be talking about his investment. We're going to do a brief introduction. Can you just introduce yourself a little bit for the
Sure,
audience?
man. How's it going, Andre? Nice to see you again.
Mm.
It's been 2 years since we saw each other in New York. It's crazy how time flies. So yeah, thanks for having me on. So my name's Adrian. I'm an investor. I consider myself a long-term income-oriented investor. I pretty much invest mostly, if not all, actually in covered call ETFs. So equities that the fund managers write calls on. So they provide a monthly cash flow. 40. Financially independent at 34 with this style of investing. And my wife and I run a YouTube channel called Passive Income Investing, or a PII for short. And yeah, we work on that. And just that's basically it. We live in we left Canada to move. We moved in Panama. I don't know if your audience knows, but we've been in Panama for like 3.5 years now. So much better weather, much better tax situation. So I got some experience with, becoming a Canadian non-resident, if any of your audience members are curious. But I got some videos on that on my channel. So I'm ready to go, ready to take some questions. I heard we got some audience questions.
Yeah, let's knock out these first. So when it comes out to the American, if you had the American portfolio, how you do the if you bought these, like when it comes to the S&P 500 cover calls, like the ones you would buy and hold forever, like why did you weigh them the same? Why did you weigh those positions?
Yeah, I mean, because of my tax situation, I do invest in Canadian listed funds, so funds that are listed on the Toronto Stock Exchange, but I mostly invest in US stocks. I barely have any Canadian exposure, any international exposure. So I typically always stick with, as my core equity position, which I know I'm 100% in the stock market. I have no fixed income, no bonds or anything like that. So I made that video because I have more and more American watchers, and I don't invest in American or US listed funds listed on the NASDAQ or the New York Stock Exchange. So I figure I'll give kind of like, what if I was American type of deal. So that's what I did with that video. So listen, when it comes to the stock market, the S&P 500 and NASDAQ 100, it's kind of like a no-brainer now, right? It's almost becoming the hurdle rate. The S&P 500, it's the top held ETF, I believe. So in terms of my personal portfolio weights, I think those are just my personal convictions and risk tolerance. Everyone has to decide those for their own. But I think that the S&P 500 should be, especially if you're newer, maybe whether you're an income investor or a growth investor or whatever investor, long-term investing here, not trading. I think the S&P 500 is a really, really good core position. Same thing for the NASDAQ 100. How much you choose percentage is really up to you. I think if I just look real quick at my portfolio right now, I have a lot more in the NASDAQ 100 and the S&P. I actually used to have a lot more in the S&P, trimmed it to allocate a little bit more to the NASDAQ, just because I'm a tech guy and I really like more of the tech stocks. There's a lot of tech stocks still in the S&P, but I'm okay taking that risk. I really like the NASDAQ, and it's been outperforming the S&P 500 for a while now. So just between those two, it's a third of my portfolio. So like a third of my portfolio literally makes me fall asleep. It's like S&P and NASDAQ. But, some people want to add a little bit of Russell. Some people like some international, some emerging markets. I just stick with what I feel are the two best indexes of all time for the US, the best stock market of all time, the S&P and the NASDAQ. But I'm more bigger on the NASDAQ right now. The rest are more positions of what I like to call concentrated S&P or concentrated NASDAQ. So maybe, what my biggest holding is, for example, a fund that holds 19 US stocks. So the Mag 7 is in there. You'll get some boring stocks, also kind of like Costco and Netflix, the Mag 7, but you'll have some more interesting stocks like Circle, Reddit, Robinhood, SoFi, things like that, Palantir, Strategy. So it's kind of like a concentrated tech or concentrated innovator type. So that's a big position as well. So yeah, it's mostly geared towards the big cap, US stocks, which are mostly tech stocks. And then I have about a quarter in Bitcoin and gold, which we could talk about later, I think, if you
Yeah.
wish.
Oh yeah, that's gonna be fun. I mean, I like Bitcoin, like crypto, but my likes are more on the crypto. I'm sorry, the precious metal side. But do you plan to make a Russell 2000 covered call, like hold which ones you'll hold forever?
I can. I mean, every month I cover what I feel are the top covered call ETFs, S&P 500, Nasdaq 100 every single month on the channel for my American friends, and I go over them. The reason I took the Russell 2000 out, I personally don't really like the Russell 2000. I don't see a point to it because it consistently underperforms long term. I'm talking about the S&P or the Nasdaq. Of course, you always hear, small caps are going to explode or when the rates come down, but I don't really care about 6 months, a year. I look at 5, 10 years plus, and the evidence is quite clear. If you take any S&P, if you just take like VOO versus the Russell 2001, which is ITWO or something like that, there's a really big gap in performance. So I think the mega caps are going to continue to outperform. They're just getting bigger and bigger, and the small caps are going to just fall behind, I think. But the Russell is a little bit more volatile than even the Nasdaq. So there is a lot of Russell 2000 covered call ETFs, which have even slightly higher yields normally than the Nasdaq 100. So like Neos has one. There's a bunch of them, Roundhill, etc., Yield Max. But I mean, people need to remember that performance is very important. I understand we like yield and everything, but at the end of the day, your cover call ETF, the performance is really based on the underlying. So this is why I don't really talk about a Russell 2000 anymore, but I could make another video of the top buy and hold Russell 2000, just like I recently did for the S&P and Nasdaq, but it would pretty much be the same providers. That have the Russell 2000 version. Some of them don't. Some of them just have the Nasdaq and the S&P, but it would be the same providers.
So if you have to get to those more actually, which brokers would you prefer for them? Like, do you have a favorite broker for them?
In terms of broker, I think that's like the least important decision. And I mean, who cares what broker you have? It's like asking what bank account are you with, right? I think the function is all the same. So I wouldn't say I have a favorite broker. I mean, I have a Canadian broker, so I don't really know the ones in the US. Although I've heard, a lot of people like Schwab and IBKR and Robinhood is very popular nowadays. That's like their popular one. In Canada, our Robinhood is like Wealth Simple is more like a Robinhood one where it's more like geared towards younger, newer investors. They have the credit cards and the points, and I think they're more crypto friendly. But broker, I mean, who really cares? Just go with the one that you could buy stocks for free, and that's already way more than you could ask for.
Especially when I first started investing stocks, I think trading stocks were like $7 per share per transaction off the bat, and like Robinhood is like, oh, I guess this is a little bit off from their current price, but it's not too bad.
Yeah, when I started, it was $30 a transaction
30?
when I first started. Yeah.
Wow.
So in Canada, there's still a lot of the big banks are at $10 now. Some of them are at $7. One is free, but now with Wealthsimple, Questrade, a lot of them are free. So people are just staying with the banks, most likely because if you're an investor, you're buying once a month. Like, okay, who cares, $7 or $10? But if you're buying multiple times a month, those people probably will leave and just go with the free broker, right? Because you're just saving $30 a month or whatever. So
let me see. When it comes to your current portfolio, like what is your favorites, like your stars?
So my portfolio, I think, I've developed my own convictions over time. It's hard to say which ones are my favorite because, well, listen, the ones I have, you think of it this way, are kind of like my favorite products or my favorite ETFs from those providers. So in Canada, I think we have some really good providers, income-oriented covered call ETF providers. I would clarify. There's maybe like 5 big ones, and there's maybe 6, 7, 8 now in the game. So I kind of like having some diversification with between providers, but I'll always choose the funds I think each of them do the best. Like every one of them has like their own specialty, or has a fund that's really doing well, that they do something really well. So that's like a consideration, but most of my consideration is really the allocation. Like, like I said earlier, like I have 33%, for example, in S&P Nasdaq 100 covered call ETFs with 25% leverage. As long as the fund manager offers me my favorite format. So maybe I could talk a little bit about that. Otherwise, people are not going to know what I'm talking about. So I'm an income investor, but I want to have my cake and eat it too. So when you're doing covered calls on anything, you're a trader, you know options, you know that when you're doing covered calls on anything that goes up long term, you're gonna lose some performance, right? Because you're literally giving up upside. So luckily there's been like this renaissance, I feel, this golden age that has begun in 2021 in Canada, a little bit earlier than the US. I think in the US it's actually happening right now. But in Canada in 2021, all these new types of funds and fund managers have been coming out offering more innovative covered call ETFs with a little bit of leverage. That's the key. So the only way you're going to get, I want 12, 14% yield on my S&P 500, but I also want similar performance to the S&P 500. You're not going to get that without leverage on a covered call ETF. You just can't, unless you have some sort of genius AI bot that's writing the perfect calls every day, which so far doesn't exist. There is one firm that's coming really close, and it's actually Tap Alpha. They're actually a US firm. They're doing really good with T-SPY and TDAC. Very, very close performance to the S&P 500, NASDAQ 100 without the leverage. So imagine those with a little bit of leverage. But anyway, in Canada, that's the format I like. Covered calls, not more than 50% of the portfolio covered, because I want some appreciation there, and 25% leverage, just regular cash borrowed leverage, not like 1x or 2x daily reset synthetic crap like there is in the US, just regular normal. So it's just 1.25x exposure to the S&P 500 with the covered call. So you have similar performance, similar volatility long term to just holding the S&P. So that's my favorite format. So I have an S&P, I have a big position in the NASDAQ, and I have a couple of other funds that are a little bit more, I call them like concentrated NASDAQ. They're still diversified, but they're more geared towards the tech stocks.
Yeah. Give me 1 second. I'm writing down the synthetics. There's been a bunch of gold and silver synthetics popping up that I have on my list. I just completely avoided them. I look at them like there's no underlying asset. They're just speculation on precious metals. I mean, they can go up, but they can go down a lot harder.
Yeah. Okay. Those are like the 2x or 3x daily type things. Yeah. Those are those are designed to day trade, not really hold long term. Whereas the leverage I'm talking about, it's just a tiny bit. It was more designed with the investor in mind, not the trader in mind. So it's definitely a bit different. And some of these are going to start coming out in the US. Already Rex shares started coming out with this similar format where they're doing about 25% leverage. So not 100 or 225, and no covered calls. Covered calls are only half the portfolio. So they have some single stocks, single tickers they do that on. They just launched another 5. So I think they have like 8 or 9 now. And that's the format that I actually like, but it's not really super prevalent yet in the US. But in Canada, we have everything we need. Indexes, sectors, single stock, whatever you want, we have it with covered calls now. Bitcoin, Ethereum, almost everything you could get now. Single stock, basket, index. So it's like the golden age now for my style of investing. It's great.
Wow. I mean, we can transition into crypto. Like, why do you like crypto?
Well, define crypto. The only really thing that I like and that I'm into is Bitcoin, because that's really all I've really looked into. So I don't know anything about altcoins or anything like that. I know the super basics of like an Ethereum and maybe XRP. I have a tiny bit of Ethereum, but most of my crypto exposure, which is about 23% of my portfolio, 23 to 25, is in Bitcoin related stuff. So it's even like diversified within the Bitcoin ecosphere. So I'll give you an example. Let me just check my portfolio now. So for about 4 or 5% is in a Bitcoin itself. How do I get that? It's a fund from Harvest and Global X has one too. They just buy IBIT. That's all they do. They buy IBIT. They write calls on IBIT. That's it. So to me, that's pretty much Bitcoin exposure. Of course, there's the 25% leverage. So your risk, your volatility more or less is IBIT, right? So, and then I have a pretty big chunk, about 9% in a ETF called HBTE. And this is called the Harvest Bitcoin Leaders. It's also a covered call ETF, also has 25% leverage. And what they've done is pretty cool. They added companies that's kind of related to Bitcoin. So in my opinion, if you just want to dabble a little bit, you want some Bitcoin exposure, this is a good way to get it because you're not investing in Bitcoin. You're investing in, for example, Coinbase is there, Marathon, Galaxy, Strategy is there, Robinhood they added, Riot, they have 10% in IBIT. Iron is in there, the data center that powers, a Bitcoin miner. So you kind of have like a little bit of diversification within the Bitcoin ecosystem. When I think of that ETF, I think of buying a gold miners ETF. Like instead of buying the gold GLD, you get GDX, and you're still getting, it's kind of like getting, should I say leverage exposure to gold? You're getting some access to gold in a way, right? So because I'm a covered call investor, which I really, we need volatility to get those high yields, you'll get a higher yield with that ETF, for example, than just writing the calls on IBIT, because Robinhood and Coinbase and Strategy and the miners, they're very volatile stocks. They're actually more volatile than Bitcoin itself. But in my opinion, it's like less risk than Bitcoin because those companies do other things, like Block is in there too. They don't just do Bitcoin. Robinhood is in there too. So that's my big position for my Bitcoin exposure. And then the biggest position, which is just slightly higher than that, which is now at about almost 10%, is Strategy. So that one's been taking a beating lately. I'm down maybe capital wise, I'm down like 50% on that, I think now, maybe a bit less than that. But I still get my income coming in. So they're just doing basically, it's another Harvest. All three of my Bitcoin ETFs are Harvest. And again, covered calls, 25% leverage. So that ETF just holds Strategy stock. They write covered calls on it, 25% leverage. So you're getting similar risk, similar volatility to just holding Strategy. So Strategy is volatile as hell, which means adding 25% leverage, even more volatility. But the covered call premiums are super rich. So the yield is like 30, 40% on that one. And it could vary. But yeah, I'm just a Michael Saylor fan. What could I say? I have the conviction. And I released a video the other day that actually got taken down by YouTube. We were talking on Instagram about this recently. Like even, what's her name? All her videos got taken down or something. So
I know you're talking about. I'm actually talking to her on Instagram right now about it.
Yeah, I really feel bad because it really sucks when they take a video down because then you get a strike and then you can't upload for a week. And if you have sponsors and stuff and they're waiting for their videos to be uploaded, it's a really tough spot. So I basically appealed the decision. They refused. I'm like, this is not harmful or dangerous content. They're like, you should read the harmful and dangerous, like suicide, nudity, drug use. I'm like, what are you talking about? It's just me in front of my computer looking at I was basically playing like the Strategy Q3 quarterly report and just giving my opinion on my updated plan for investing in Strategy. That's it. Long story short, after 3 days, they reinstated the video. They just put it back up. They took the strike out. So I think I'm going to avoid like a lot of Bitcoin and crypto related videos because for some reason, this is actually the second time a Bitcoin related video got taken down. So I don't want to deal with that crap.
Yeah. This is not like, even in our YouTube group, they're talking about crypto related videos have been either taken down, set for the same dangerous. And Victoria Media, she actually started another channel just because YouTube is not.
She's
I
having
understand.
problems. Yeah. No, it's very slow, and it's their AI, right? Their AI basically flags it,
Yep.
and it's not like it goes to a team to double check. I think they just boom, you get a strike. You can't upload, you can't do anything. To appeal, it's very hard to appeal. It's very easy to click appeal. There's like a button called appeal. So I'm like, yeah, I want to appeal and I want to state my case, but you appeal too quickly, you press the button, but it's not very obvious where to put like the text to explain this is just an educational entertainment video. There's no harmful thing. So you hit the appeal by accident. 5 minutes later, because you didn't write anything, it gets rejected. So I had to contact Google and like beg them, look, please, just have someone look at the video, watch the video. You'll see that it's a joke. It's not harmful. 3 days after they reinstated the video. But where was I? Yeah, my plan for MSTR, which I own via MSTE ETF. And by the way, in the US, there's like a million. There's a million strategy covered call ETFs. There's so many of them. But MST is the one I like in Canada. But you guys have MSII from Rex shares, like I was talking about. They have some leverage there and cover calls on 50%. But there's so many of them. Roundhill has one, and there's all kinds. But yeah, it's been in the dumps lately. It's like literally someone has fallen off a cliff or vomited, like when you see that chart. So, but I mean, I still have the conviction, and this happened before. Right. If we're talking about Bitcoin drawdowns, I recently got into it. But when I hear people, or when I hear them say Bitcoin had, just 5 years ago or 6 years ago, 80% drawdowns from 125 to now 99, that's not even close to 80%. Right. So I think it's a lot. Like, I'm a long-term investor. Like, this is a 10-year plus for me. So I understand that it could be a roller coaster along the way. So I kind of modified my strategy. And I decided to invest a smaller amounts, but more frequently, because the roller coaster is so crazy and so high. I figured dollar cost averaging a little bit more frequently makes sense for this one. So we'll see what happens. My plan is to invest about 2,000 to 2,500 Canadian every single week in MSTE, ride or die. Ride or die. I don't suggest anyone to do that, to follow me. MST is just an ETF that holds MSTR with cover calls and 25% leverage. So I have about the same risk level as just owning MSTR, but every month I'm getting my cash flow, right? So I might be down 100, like a lot, 50%. But right now, for example, I'm getting almost $7,000 a month of cash flow from that position. So it's definitely my highest risk, only fun position I have in my portfolio. Everything else I have, like we talked about, to me is boring. Like holding the S&P NASDAQ 100, it's just boring. Like, I don't know what, if I have trouble falling asleep, I start thinking about my investments. Like the first couple of investments I have, like, oh yeah, HYLD and, QQCL, which is basically S&P and NASDAQ. It puts me right to sleep. Like, it's just like amazing. It's great long-term. Like, so and that position is just under 10%. So I kind of put a limit of 10% on that position. But it's the only fun I really have in terms of investing. I'm not a trader like you. I don't have fun every day, and I have no excitement anymore. It's just boring. So I'm like, what? I got to give myself a little itch, a little, and that's maybe something I recommend for investors, long-term investors who used to come from trading. Like, put yourself 5% in something. Just have fun with like 5% of your money, just to scratch the itch. So, because I used to do some swing trading a long time ago, and I remember it could be very exciting, but man, your stomach could drop sometimes on those red days. Like, I was investing in these smaller cap oil and gas stocks because Canada, we loved our oil and gas stocks, right? So yeah, I mean, we'll see what happens with that.
Yeah, especially we're seeing when the direction of crypto, because like we had that high back in, I think, where is it? In October, that 126.
Not that long ago. Yeah, 126. You're talking about Bitcoin now, right? Yeah.
Yeah, Bitcoin, crypto, like it's I don't know, like when you talk about the risk and the fun, this would be my fun, and that's crazy. We were talking about offline, like where Bitcoin's going to go. Like, what are your thoughts? You think it's like, just say next year? Do you think it's going to be breaking above its high or heading down here?
I don't know, man. I really don't like talking price predictions. I really
Uh,
have no idea. If I would to guess, like I like listening to what Michael Saylor says because everything he said has come true. I mean, I don't know if you know his story, his backstory, but he kind of like predicted the Mag 7 a long time ago. He wrote a book about it. And basically, I remember him saying it's going to be very volatile. It's going to lose its volatility along the way. And in terms of stock charts, because I know you traders love to look at the charts and stuff, I never forget this. He's like, I think he's, and the question is going to be the same to him. Like, what do you think Bitcoin's going to do in the next year, 5, 10, 20 years? And his answer was, I just think it's going to continue to do these snake likes up and downs, but but keep going up over time.
yeah.
So I don't know if it's going to take 6 months or a year before it goes back to 125 and pass it. But as an investor, long-term investor, I think it's inevitable at some point. So why not just snatch up as much as I can while I wait for that point? That's the mentality of an investor. I feel the same way about the S&P, about the NASDAQ, about gold, about real estate, about assets in general. There could be dips and whatever based on emotion and what's happening and the economy. But I think over time, because of inflation, all asset prices just will continue to go up. Just some more faster than others, but eventually the trajectory is always the same, right? What do you think about that?
Interesting. Because like when it comes to like commodities, a little bit different, but Bitcoin, like I do see it higher long term. Like I think we have that same perspective. Long term, 5, 10 years, much higher.
Yeah.
But in the short wise, like since I do trade Bitcoin a lot more than I buy like cash positions, my only cash positions I'm looking at will be because I'm currently shorting from these two bars right now, just 2 weeks. And I'm shorting down to one of my biggest take profits is basically 80,000 clean, and then I have it stair stepped or grid stepped all the way down. If it, I hope, please break the 70,000 low. So for me, that's what I look for when it comes to trading. And if it does go down there, I'll close those positions and then looking at buying cash positions for long term.
Yeah. Yeah, you're a trader. You're definitely a trader. And listen, it could very well go down. And guess what? I'm gonna keep going. I'm gonna keep buying consistently over time. And like I'm with you. I mean, as long as it goes back up and it continues, and I'll get more and more units, and eventually maybe they'll increase the premiums. So, like I said, for me, it's the only exciting position I have. But I'm thinking about MSTR. MSTR is even more crazy. Are you shorting how do you short it? Are you shorting Bitcoin? Are you shorting IBIT?
Oh,
How do you do it?
I directly short Bitcoin.
Okay, you directly short Bitcoin. Okay, using how do you do it? Like with options?
Oh no, with so I use IC Markets, and IC Markets gives me like a synthetic position when it comes to shorting crypto. And with their it's basically called it's kind of like not an ETF. It's basically them allowing me to short the actual product. I pay a daily fee to hold the positions. We use them in different like packages or like lot sizes. I would say just different types of bets, heavier bets and lower bets.
Yeah. Yes. Okay. So you're shorting it. You're like so apparently some guy shorted the strategy stock because it was trading such at a big premium of its Bitcoin holdings, and he got out of his short today, I think. So today, coincidentally, is the day where now the MSTR's market cap. I'm looking at it now. They have a dashboard. I look at it all the time. So their market cap is just under 60 billion now, but the Bitcoin that they hold 641,692 Bitcoin. The value, even at the current price of 99,000, is worth 63.5 billion. So their stock is literally worth less than the Bitcoin they hold, which makes no sense, really, right? So this is why I love like you guys. I love traders because and AI bots and trading bots, because imagine if everyone was was a long-term buy and hold investor. What do you think would happen? I mean, prices would, I mean, just go up over time. And I
Yeah.
mean, what would happen, right? There would be no volatility. There would be no options market, right? So this is why, like,
Yeah.
God bless the traders, man, that just keep the whole circus going and the emotions and going, you know what I mean? Like, for me, it's like, I just care about the long term. So
So, and that's why, like, when it comes to long term, that I like, we were talking about earlier, is precious metals. That's my bread and butter. That's like the one thing I rely on more than anything else.
So gold, purely gold, some silver, some other precious metals.
So I used to be in palladium and rhodium, but it is only focused now, and oil, but oil is a different part of the portfolio. It's mainly gold and silver now because I've been buying
Gold
it
and
since
silver. Okay.
2008.
And you have physical silver. Do you buy like the GLD ETF? Do you buy the miners? How do you get your access to it?
So, okay, so the first part will be precious metal physical. So that's
Yeah.
through Providence Metals, APMEX, JM Bullion. That's like actually something you can physically touch. I would say if you're going to buy it, buy a coin, just like the first one, just to see how it feels, like how it's different, and keep it in your wallet just as a keepsake. And then the rest of it, then you can get kind of crazy with it. So before, what's it
So you
called?
have like, do you have like a safe in your house?
Yeah. I have it safe, and
Huh.
the rest is shipped to Citadel. Citadel charges you, I think the lowest is $15 per quarter, and if you have like I think it's like every couple $1,000 worth of precious metals, it's like $15. So I just have the majority of it in storage.
Okay, so they store it for you. You know how, you know, they have you, they know, have a record of how much you own and stuff. And the more you get buy with them, they give you a better price.
Yep. And
Okay.
for me, I tell people, like, I buy and sell. So for example, when silver, I have videos of me buying it under $10. I just sold 2 months ago, like a small portion, because I dollar cost average in, and I exit slowly out.
Okay.
So as a long-term investor, when I see this high of 50, I had to sell, not like 100%, sell like 1%, 2%, just to get it normalized the process. Because selling precious metals is not like your Robinhood account where you just hit close.
Yeah.
You have to call the broker, ask them, I need a quote. They give you a quote. They ask you, how do you want to sell it? And then when they buy it, the spread is ridiculous. Like the current price was like $50, almost like $40, but my selling price was like 35, like a $15 spread.
Mm-hmm.
It was crazy.
So let me ask you a question. Why not just buy GLD or the silver bullion ETF instead of doing that?
So for me, you can buy both, and have, because I do buy both. But when it comes to actual physical precious metals, it comes to a little bit more of the political side of precious metals, and that's more going like in the past, and when precious metals, have gone to this type of point. And this is the point that I wish I knew. So when I first bought precious metals, I didn't know that we were in a cheap market. I didn't know about the 2008 crash until like a year later after studying about it. So I was just buying because my supervisor told me about it. Because like when I was if you guys know, I was in the Air Force. My supervisor said, "Hey, Andre, you need to buy this asset. And when you get out of the military, you have something to sit on." So I'm like, okay. So I just started buying it. And then I didn't know why I was buying it. I was just buying it. He showed me Peter Schiff, George Gammon, and then Mike Maloney. I started getting into it, noticed that we were at a high the year later. And I was like, okay, I'm going to sell the next bull run.
Okay. So for you, precious metals, would you say, because you're a trader, right? You make your, is trading your full-time job, would you say? Is that how you make your bread and butter every week?
Oh,
or?
wow. I would say it's a portion of it, but the majority is owning companies. Like, so for me, I tell people like whenever your portfolio, one portion is trading, which is done by AI, not AI. I'm sorry, you said AI. It was done by expert advisors, automated program trading. So basically, if you're a moving average cross trader, every time a moving average cross trades, I get a notification on my cell phone to enter a trade. So what I usually do is when my league of robots will send me notifications, I enter in a demo account first position demo account. If it retraces or does it again, enter the second position demo account. Does it, wait a couple hours, If it does a better pattern, hit a support, enter on my live account with a very small stop loss because my leverage is like 1 to 1,000. Or so that's why I have to be very particular when I enter.
Wow, that's a whole process. Okay, so
Yeah.
you're through and through of like pretty much a professional trader at this point.
Yeah, I mean, I live off of trading and also business, and the businesses that I do buy into would be like physical ones, loaning money out. I love that portfolio. So, and also selling programs. So I've been through the Air Force. I sell programs for either companies, software, and that's the other portion that pays for my lifestyle. So when people are like, Andre, you're not doing YouTube. Well, if you see like the 6 computer monitors you see around here, it's me coding for other people.
Okay, so wow, so yeah, it's true. You were telling me that you're a coder. You know how to code these AI bots and stuff like that. Interesting. You got a cool special set of skills and you're monetizing it. Cool. So let me ask you this: what do you consider as is your precious metals? You consider that as like your long-term store of value,
Yeah.
your investment, but still you would sell a little bit at the top. You'll trim a little bit.
Yep. I follow the same selling style as Mike Maloney and also Peter Schiff. Like I'm also accumulating because I have a rule. And this is the one thing about building a portfolio. I would tell people have set rules that cannot be changed unless
that's good advice.
Unless selling you're going to liquidate. Like if gold jumped to 10,000, I'm going to sell. I'm selling. But most likely it's not going to do that. It's going to stair step its way all the way up. Pullbacks, retracements. And for me, I just an example, if the MACD goes from positive to negative on a monthly scale or starts to trim for its histogram, I'll sell 1%. And remember, this is long term, so don't sell 10. Oh my God, I can't tell you what to do. But for me, I look at selling 1%, 1.5%. And then on a Friday, and usually that's the time I buy, Fridays are like typically like lows for precious metals. I'll enter on a small buy, and that's through either Glint Pay. Glint Pay is my other way I buy. Glint Pay allows you to spend on your debit card precious metals. So this is one part of the portfolio. You can't be all in physical. So this is for the conspiracy theorists, guys. Long ago, gold and silver was stolen or not stolen. It was told to be returned back to the government and paid a portion for it. For me, I see that as a small possibility. It's very minute that it happens again, but it could happen. So what I do is I buy precious metals and allow it to be spent on my debit card. So but to buy gas, like I haven't had it in my portfolio rules. I'm forced to spend precious metals so I can get used to it. I know the process in selling precious metals. Like if you think you're going to get your money within a day, that's not going to happen. If you sell your precious metals, you're going to be looking at 1 to 2, maybe 3 weeks from complete liquidation, inspection, and from that to be sent to your ACH transfer to your bank account. 3 weeks. So that's why to me, I know the process down.
Yeah. Okay.
And then they also go ahead.
I was going to ask you. So when you sell or trim a little bit when it's really, really high, what do you do with that money afterwards? Because you said this is kind of like your investment, your long-term store of value. Do you invest that in something else? Is it just cash? Is it spending money for you? Do you have like an S&P 500 like that you're just buying and holding forever, or you're just not programmed that way?
So for me, that would be part of the JEPI, and I've been buying JEPI pretty constantly. And the other part would be savings. I'm sitting on cash as much as possible, and this is why if you're a precious metals guy, you're waiting for the markets, because if the precious markets are going up, we're waiting for the indexes to crash so I can rebuy them at a very cheap amount. So we have like a 5-10x precious metals, take those proceeds and put them into cash flow or like index funds. And JEPI is one of my favorites. Like that's like my
why is JEPI that like there's so many better ones in JEPI out there right now, right?
Yeah, because the main reason why JEPI, because when I remember when I met you guys about it, because I didn't know about these investments prior. I was only like, I didn't know about any of this stuff. I didn't know about yield max. That was brought to me when I met THB, who told me about yield max. And then I'm like, how are you guys getting such this is insane dividends. Like my dividends is like 0.01%. Like I get a quarterly dividend. or quarterly or annual dividend. That's it.
Yeah.
From the miners. And that's why, like, for me, I'm going to sell all those positions. And hopefully, in some magic, if it does do all what I need, I'll sell those positions, put them in savings accounts, because I do have a lot of my things in savings, because I like to have a portion of my life, because I have a family that has zero risk.
Yeah,
like
cash. Yeah.
Yeah.
That
and
makes
then
sense.
the rest of it starting other companies, because I like to build, for me, I like to invest actual cash in the company. So actually, let me bring up my portfolio real quick and read it to you. Give me a second.
When you say companies, are you mean like public companies or more private stuff, or
Private.
just companies you private?
Yeah. So one of my favorite private companies I bought into was in 2020. I bought into a vegan. I'm sorry. I bought into a vegan. It's called vegan. What's it called? Basically a vegan McDonald's. I like to buy with actual cash, because I don't have to worry about market changes. I can actually talk to the owners. I can loan out the money to them. I love doing that stuff without worrying about market conditions. And with that, I can control the yields. I can make my own contracts. That's the stuff I absolutely love to do. But
Okay.
I used to talk about it on YouTube, but it's not as popular. It's not. That's why I had to transition on YouTube.
Yeah. Okay, cool. Interesting. No, man, it's like, you see what I mean? There's like a billion ways to invest and manage your money. Like I'm a big proponent of not telling anyone or judging anyone how they're investing their money. Like whatever you're doing, as long as you figure out what's best for you, what works for you, that's great. Right. So it's really cool that you have different streams. Yeah. So Jeppy is kind of like what? Like your cash cow a little bit, maybe?
Yeah,
like
that's the only cash cow in the group. The other ones is like GDXJ. They pay annual dividends, and that's it.
Yeah, that's the gold miners, right? GDX is the Van Eck gold miners, I believe.
Yeah, and GDXJ, like, for me, the reason why I like them, they are volatile. It follows precious metals, and I mean they got a little dividend. But those are the ones that I like. The building up those, I don't even look at them in a sense. Like I literally just log into my account.
Long-term investment. Yeah.
Same thing for precious metals, but I did start and this is for my kids. I told them I did start a silver kind of like numismatics, like the Star Wars coins. I started buying those, so when I do die someday, they have this book, because I think precious metals are going to be a whole lot more.
Yeah,
and this is probably going to transition into our conversation about precious metals versus crypto. Let me see. Why I prefer, it's actually pretty interesting. Where's it at? So guys, if you didn't know, I'm just creating this thing for my kids. So when I do die, they have a book of hard assets that they can't liquidate easily. They have to go to a pawn shop, or they have something to look at. But this is the primary reason why I buy precious metals. It's because 1913, we used to be attached to gold and silver, and the dollar basically used to be really good, but now it is like doing super duper bad.
Yeah. The dollar lost what, 99.9% of its value in the last 100 years or something?
Yeah.
Yeah, that tells you all you need to know, right? So, yeah, I mean, I would strongly reconsider your Jeppy, because there's actually much Jeppy. You know what it is, right? It's basically, let's choose some lower volatility stocks in the S&P 500, put them together in a portfolio, and we'll write some call options on them. So you'll get a 6 to 8% yield. So it's kind of like dividend stocks meets covered calls. What I don't like about it, and there's much better ETFs out there, you're not actually buying the S&P 500. So the S&P 500 has destroyed Jeppy. So that's why I like much more an S&P 500 covered call ETF. So there's so many good ones. Like Goldman Sachs has a good one, GPIX, and it's been outperforming Jeppy with a higher yield. You have SPY from Neos, and one firm you should check out and consider. It's a newer firm. They do zero DTE calls. They use AI to help them do that, and they have the best performing S&P 500 and NASDAQ 100 covered call ETFs. It's Tap Alpha is the name of the company, and their S&P 500 covered call ETF is called T-SPY. It's literally neck and neck, exact same performance, almost same performance as the SPY. and it's a 14% yield. So it's like
here?
double Jeppy's yield, and they just released their Nasdaq one, and their Nasdaq one is actually outperforming QQQ, and
I
that's
never heard of
17%
this.
yield. So those two I would really consider for your to replace your Jeppy with. Not that it's wrong to do that, but it just goes to show you that most of the time you might as well just stick with the index instead of stock picking. You'll do much better. So yeah, they're destroying
Yeah.
Jeppy right now.
Yeah, just looking at this, I mean, that is if you can cut that. Oh, thank you. Now I got some like since I've been doing all these interviews, I have like completely added so many research to it. Like Max Invexity does a lot of covered calls. I'm not, such a big person in that, but he was telling me all these other things about, getting into Bitcoin with the cash flow. And I'm like, I never done that before, but I'm going to look at it. Why not? I mean, especially
this is just a cool replacement for your Jeppy. You'll get better performance, most likely, and you'll get like at least double the yield. I mean, just the T-SPY is 14% yield, paid out monthly. I think they're very, very, and they're even more tax efficient than Jeppy's distributions. I think they're mostly all rock. They do it on purpose to give you mostly rock, which is a whole other topic. But I think more and more people realize that rock is good. It's basically delayed capital gains. So yeah, it could be a great option for you as your cash cow, if you will. It's definitely one of the ETF providers I would strongly consider if I was an American.
I see it. That's actually really good. I mean, I can add some more because, like for me, sitting on cash is nice. I absolutely, oh my god, I love savings accounts. Like that's probably the one thing that I do. I wish I can even talk about more on YouTube, but it'd be like, hey, this savings account has a 3.6. You should Zelle and transfer all your money over. And they have a limited 1 month special. You get like a 0.5% more. That is fun. I love.
Did you hear about Michael Saylor's savings account that he created?
Oh no,
Stretch. Oh. So there's MSTR, and now they issued a bunch of preferred stock that all have different functionality, right? There's Strife and Strike, and what's the other one? Stride. They came out with one to compete with a savings account, with a money market. So it's the lowest volatility preferred instrument that they have. And basically he said, we always want to make sure it stays at $100. And it's a monthly dividend. It's all rock, and it's 10.5% yield, my friend.
Wow. What's this ticker?
Stretch. Hold on. It's STRC.
TRC.
Yeah.
What?
So this thing should, the goal is to always make it hover around $100. Of course, it's basically like the lowest risk preferred instrument that Strategy is offering. So Strategy is trying to recreate the credit market. They're calling it digital credit. So they've offered all these preferred shares, and Stretch is the one that they're going to start marketing now as basically their goal is to market it like a savings account, but it's like backed by Bitcoin. So I would keep your eye on it and see, what is the actual volatility. It's going to be maybe slightly higher than a cash account, obviously, but the volatility, like his goal is to make the volatility zero. His goal is to eventually make this into like a savings account.
I like that.
Might be a cool option.
Yeah, I mean, like with my current research, I thought about adding more to my international stocks because of the dollar being so high. Like a good example, like pound yen. The yen is getting demolished. So 2 weeks ago, I just got approved for my Japanese trading account. So I thought about sending money over there, buying Japanese stocks on a cheaper discount, and start buying into those assets with the dollar yen conversion. But
yeah, why not?
Yeah, I tell them that the international stuff is mainly for freedom wise, not for money wise. You want to make money, but you want to be able to use your passport to escape.
Yeah. I mean, now that I don't have a Panamanian passport, but I have a permanent residency. It does make me feel better knowing that Panama is more my home base now. opposed to Canada. But I still have my Canadian passport and everything. I'm still a Canadian citizen. You don't lose that when you leave Canada. With America is a different story. It's a lot more complicated.
Yeah, you have to. So every year it's like I have to file taxes in the other countries. Once those tax returns, and then I got to get them translated, notarized, and then sent back here. I mean, I absolutely dislike paying taxes. Like, it's such a pain, but there's nothing I can really do as an American. But I think the other cool part, something to talk about, would be like we talked about, like the combination. Like, what do you prefer more, gold or silver? Oh, I'm sorry, not gold, silver, Bitcoin or gold? Because you said they're very similar, right?
Well, I think their point is very similar. So I like both. To be honest, I think both make sense. I just think gold is more the analog, more traditional store of value, inflation hedge. Been using it a long time. It's been rocketing. I saw a video and all these central banks are buying it. So you know what? I'm going to buy some gold miners because at heart, I'm always still an income investor, covered call income investor. So gold doesn't have much volatility. So if I get a gold covered call ETF, well, in Canada, we don't really have many. In the US, there's actually a pretty cool one from Neos. They have a physical gold covered call ETF that has 12% yield. I just interviewed those guys. I don't know how they crank out such good yield on gold. I'm like, is it gold or gold miners? I couldn't believe it. They're like, no, it's physical gold. But I think they use a bit of synthetics to get their exposure. But physical gold exposure, if you will, with cover calls, 12% yield, pretty interesting. But what I was going to say is I have a little bit of gold miners with cover calls and leverage. So I got like 2.5% my portfolio in that. But Bitcoin is, because I'm a cover call income investor, I like volatility. I want volatility. I get bigger premiums and payouts. So Bitcoin is much, much more volatile, but I think the two assets are very similar in what they're trying to accomplish. But I think the Bitcoin is much more, you talked about conspiracy and stuff before, but this is why I'm curious on why you don't think of Bitcoin like as a long-term investment, but you think of gold. Because gold, like you said, they could steal it. It's physical. They could manipulate it. They could make up the numbers. What if they figure out how to actually make gold, how to create gold? What if they find a mine or something? Oh, by the way, we found 18 billion tons of gold, so the price is going to drop. Like, that's what I really like a bit about Bitcoin. It's a fixed supply. Nobody could create more, as far as I know anyway. So it's like it takes away that doubt that gold has, but it's kind of like the digital version, but even better because of the hard cap, and nobody's really controlling the gold. Where I could see the U.S. government controlling the gold, or like you said, maybe seize the gold at some point. You just never know, right? So I think they both accomplish similar thing: hedge against inflation, hedge against the government, hedge against money printing. You can't print any more Bitcoin. So that's really why I like it. But again, I'm a cover call income investor at heart. So out of my Bitcoin positions, the actual Bitcoin is the smallest. I have more in the Bitcoin miners and the strategy, because the volatility on those are like insane. So I'm getting these massive premiums every month, and I'll just keep buying more and, averaging down, and I'm in it for the long term. So
I like that.
But hey, I like gold too.
Like for Bitcoin, I mean, like actually, I'll pick Bitcoin and I'll separate it from crypto. So when it comes to crypto minus Bitcoin, all I hear is just speculation. Like when people talk about like altcoins, they're like, it's going to go from $1 to $1 million. I never hear about the actual use. Like that, like it's like capital gain and then 1% use.
Yeah. Yeah. So I mean, that's why I don't know about the altcoins, or I know some of them they're supposed to have utility, like Ethereum and XRP and Solana, but I don't really did too much research on it. But the point of the Bitcoin is really to be the king, to be the store of value. I think what's the difference between Bitcoin and all the rest of them? The hard cap, nobody centrally controls it. I think that's very attractive, very unique, very different. We'll see what happens. There's a lot of potential headwinds. I mean, or is it tailwinds? No, tailwinds, I think, for Bitcoin. You got the Clarity Act coming. You got the pro Bitcoin administration. Maybe they will pass that Bitcoin Treasury Reserve or whatever it is. And you just never know. I know now it's in a big slump, but that's just the you got to ride the roller coaster if you're going to be a long-term hodler. And I know people have been doing it for over a decade. It's what, like, how long has Bitcoin been around? Like, it's like 19 years or something.
I think so. It's been around for quite some
2009?
time. Just like
2009.
my
Yeah.
big thing about like Bitcoin is like when I look at when I compare it to crypto, there has some similarities. One similarity is that the majority of people talk about one price and it's expected to go higher, right? Kind of like gold, because I agree. I don't use gold for any other reason but selling it, and that and it's very, when it comes to a tier one asset, central banks buy it. If Bitcoin was a central banks bought it, then I would look at it a little bit different. But to me, it's like Bitcoin can if enough people vote on it, they can spat off and make Bitcoin gold or Bitcoin whatever. It can have a copy of it, but as like a programming sense of it, Bitcoin can be manipulated and created faster without having the same issues as Ethereum. Ethereum is controlled by a company. They can have any direction. They can manipulate if they wanted to, change it if they wanted to. They can be, hey, for now on, Ethereum is going to be fully backed by silver for now, or oil. They can do what they want. Bitcoin doesn't have that option. But to me, it's like, I think it's dangerous long term because Bitcoin is number one. For what reason? Because it came out first. It doesn't have a person behind it, but the person who owns the most Bitcoin, Satoshi, the dude, right? His wallet hasn't moved a second. If he does move his wallet, that is where the market is going to get slapped very, very hard. And if Bitcoin does go below, say it goes to record lows like $500 or $10,000 or something crazy, will people still buy it?
I would. I mean, at this point, I'm in it till the end. So I like you said at the beginning, I don't know. I think we weren't live, but you got to everyone has to put parameters on their investments. It really is all about risk tolerance and conviction. Like everyone's just talking about prices and even like Bitcoin. Like I have fun sometimes. I'll go watch some Bitcoin videos. There's so much price predictions. I hate those. Like, talk to me a little bit about the use cases more, the technology, the advancements in the industry of what you're creating by holding Bitcoin as a commodity, right? So I look at it more like a technology as well. I mean, I have a tech background. I worked in technology my whole career. I have most of my portfolios in tech stocks, I guess, percentage-wise. So I see it more like a technology / commodity, or like, you know, I'm more in that camp. I can't say I'll have no idea what's going to happen. Maybe I don't know, how low could it go? I mean, right now it's at 99. The high was 125. Now it's at 99. This story has played out before to a much bigger level, right? A much bigger drawdown. So we'll see what happens. I think it's still early, but when I hear banks owning it, banks saying we'll be able to make loans backed by Bitcoin or Ethereum. I don't know why they said Ethereum as well. That's very strange to me. Bitcoin, I understand. Ethereum, I guess they see it as a second best, I guess, as a mature asset. When I see that and the Clarity coming, and with the stable coins, they already passed the Genius one. So I think could be huge potential. Like I said, I think it's the highest risk, potentially highest reward, but potentially the highest loss in my portfolio. And I'm okay with a 10% allocation to MSTR and maybe about 25% Bitcoin related stuff and gold. I'm okay with that. If it goes to zero, I'll be okay. I'll be fine. I'm not going to be on the street. But, you know, when I hear people going all in and that's all they have, they leverage up, like that's crazy. I don't, you know, I'm an investor. I'm not a speculator, but hey, it's everything else is boring, you know. So for me, let me have a little bit of fun, and this is my fun conviction, my high risk, high reward investment, if you will. And you know, if you talk to a Bitcoiner, they're gonna laugh at me. They're gonna say, That's your lowest risk. Your highest risk is the Nasdaq or the S&P. So risk is also like in the eye of the beholder, if you will, right? So I can't tell you, like, I think one of the questions you got is, why do you have a high percentage in the Bitcoin and the Bitcoin companies? Because it's high risk. Well, maybe it's high. You view it as high risk. Maybe I don't view it as high risk as you. So it's all about figuring out your parameters, what you could stomach, and this is all stuff you gain knowledge throughout the years as a do-it-yourself investor.
I like that, like the do-it-yourself investor, because when I get told that, like, Andre, you have too much precious metals, I'm like, look at the chart. Look at the chart. But I don't know. It's like give me a second.
My camera was unplugged. That's strange. Hold on.
Okay, give me a second.
There you go.
Here. So I tell people, like, what I do like about the Bitcoin precious metals argument is because because of this right here, the U.S. national debt. Like, to me, I think that, like, if I own Bitcoin, and I do own it, I just prefer trading it, because trading it is more fun. Like, I do get like kind of that was it adrenaline rush when I put in like 2 live positions shorting, and then I hear my crypto friends in their group saying that they're buying, I'm shorting. I'm like, oh my god, one of us is right.
Yeah, that debt calendar is pretty scary, right? But I don't know. What is this this U.S. debt clock really mean? I mean, all the governments are in the same position. Nobody's balancing the books anymore. I mean, they can't do it.
But
I mean,
what I like, they have this right here: the gold, like how much gold like each country has in demand, and how much gold can be. Like, to me, I see that the government, I think all governments, and like, not to be politicized, like left wing or right wing, I just think that they're all bad with money. They all like to spend other people's money, and they're going to keep spending. They keep spending, and they can either be honest or dishonest about it. I just know that the purchasing power of precious metals, crypto, and I say a little bit of oil for energy will go up long term. I mean, we might get a president that says, hey guys, we've been lying to you. We've been blowing the money. We don't care what you guys think, but we're just spending it the way we spend. Cool. That's not going to happen, but
no, I think you're right. I'm with you. I think all assets are just going to keep going on. I mean, money has to go somewhere, right? The rich people got to put their money in something. And obviously with this US debt clock problem, a lot more money is leaving bonds now, right? So
actually, it's essentially, I've never bought into bonds. Like, when I look at the bond market, I'm like, I just rather trade. Like, because it's actually interesting. We have that same thing about yield. We look at how much money can we make on a monthly or quarterly basis before even jumping into the asset.
I've never really liked bonds, long-term bonds. I got into it once, and I'm like, you know what? As a long-term investor, it's very, very clear that equities will always outperform fixed income. I mean, gone are the days, I think, where we'll have 10% interest rates, where bonds might be attractive. But I mean, what they raised it to in Canada, I think they raised it to like 4 or 5%, and all hell was breaking loose. And they had to cut the rates. Now in Canada, it's like 2.75%. You guys are still, now they're starting to cut, but it's still fairly high compared to Canada's rates. But people don't know that even 4 or 5%, it's not that high. So it's like the government is mimicking people, or people are mimicking the government. They're just taking on too much debt, right? Yeah. So
actually,
I don't know how are they going to solve that problem, dude. I have no idea. I mean, they can't fix it. They'll never be able to balance the budget, right? They're going to have to cut Social Security, I'm assuming, at some point.
Oh, don't say that. That'll
get you canceled, right?
Like, it's crazy because here's a kind of weird situation. So, do you like countries that have negative interest rates? Like, would you invest into those for their currency being bad?
I don't know, man. I don't really look too much. You look at everything. That's amazing. I don't look at currencies or other countries. I just look at mostly the stock market, the overall stock market, the best businesses, the best stock market in the world. If you just take a 10-year window, it's always been the US. So that's, I know, I like to invest in that. So I don't really care about what other countries are doing, other stock markets. I don't invest in like international stocks or European stocks, emerging markets, because if you just look at those indexes and compare them to the S&P or the NASDAQ, it's not even close.
Yeah.
It's not even close. I think Canada's second best, but the gap is still massive if you just take like the TSX 60 versus the S&P 500. If you go last 6 months, last year, I think the Canadian stock market's blowing the S&P away, doing really well because they have a lot of gold companies there. A huge chunk is in financials and in gold. And guess what? When they cut the rates, the financials are up substantially. Gold miners are up substantially. And there's a lot of energy companies. Canada is all financials, energy, and materials. In the US, it's all tech and healthcare and financials as second or third. So long term, the US always wins. So
I like that. I'm gonna look into that Canada and gold. I'm not.
There's a lot of gold companies in Canada. There's a lot of gold producers are there. So Canada is very rich in gold and materials. It's a big country. There's a lot of good stuff there.
Because I'm actually going to my account right now. The only position that I have towards Canada is going long Canadian dollars versus yen. So
going long Canadian dollars versus yen. Okay.
So in that perspective, Canadian banks are paying people who hold the dollars to short. Hold Canadian dollars to short the yen. They're paying us a daily dividend.
Really?
Yeah, that's why I love international stuff so much, because we don't get monthly dividends. We get daily dividends, the whole positions. We get a daily dividend. Wednesdays, we get a 3x dividend. And on Fridays, we get like a 2.5 dividend. I'll bring up that chart.
That's cool, man. I never even knew this stuff existed. When you say dividend, what do you mean? Like interest payment?
Yeah, like an interest payment. So right now, if you buy, just say you had $100, just an example, easy number, right? $100, you put into CAD yen, you do a 0.1 lot. So very, very minute, small amount. You'll get about daily 7 to 8 cents every single day. And on Wednesdays, you get 24 cents. So if you start seeing it on a dollar perspective, you'd be like, okay, I earned this week $2 or $3. And so
how would your position lose value if the Canadian dollar goes down?
Well, it's kind of a mixed bag. If you're buying right here and the market does go down, you can be taken out of your position for like a margin call, or you can hit your stop loss. Because remember, this is a highly leveraged position. You're going 1 to 200, 1 to 1,000 for that position. So you got to be kind of particular in where you enter.
Interesting.
But if you look at the market, I'm talking about everything is short yen. So I've been buying against or shorting the yen for years now. It's like one of my best Forex positions. I just tell people, like, if you enter, this is what I do. Please don't do it. If you look at pound yen, buy every single Friday, you'll get your 8 cents will come up to 24 cents. You'll be earning almost $1 every single day for your $100. Actually, I'll bring this on a chart so people think I'm lying.
Yeah,
I absolutely love this stuff.
You just think the Japanese currency is going down over time. That's your bet.
Yeah, and it's not just that. All the banks agree. All the banks are paying daily cash flow for shorting the yen. Here, let's bring up.
The first time I hear this kind of thing.
Yeah, CAD JPY. I'll bring up the chart to show people like this. This is the stuff. If you look at my 6 monitor screens, almost all of it is negative yen. That's why I'm sending actual physical cash to buy the yen, because I'm getting like a 40% boost with dollars.
Wow.
There you go. Let's look at this right here. So if you look at it, everything is long. This is like the long-term stuff that I like. If you look at it long-term, for years, since 2021 or 2017, if you just bought every single Friday or once a month, you'll be in massive profit in 2026. And you're getting paid every single day, daily interest.
Mm,
And Wednesdays for my broker, they pay 3x. And I mean, here,
interesting.
watch this chart. It's gonna blow your mind. GBP, JPY. That's pound yen. This chart is so nasty looking that you have no interest going long yen. Look at that. This is my own chart. I've been buying since I've been buying for years, shorting the yen.
That's crazy.
I even for me, I expect this to go up here. And amount of points, like some of these points, like I enter in so often that this is like I don't care where the position's at. A lot of them have no stop loss. So if something bad did happen and they like tanked, it might hurt. But
Yeah.
I don't expect it to do that. I don't expect this to happen anymore because the way that Japan manages their money, if I had to put them on the list of not idiots, I don't want to use that word, but Japan is the worst in managing finances for their government. Their government is really, really bad.
Really? What didn't they get a new prime minister that's more right wing, which means typically more fiscally responsible?
Here, I'll give you Japanese interest rates. Or look up look at this right here. Yeah, trading economics. And this is the primary reason I was telling people why I love international. If you look at any country that has negative interest rates for a long period of time, and Japan has negative interest rates for like what, 10 years, 10 plus years. Let's go max. Always look negative. They don't promote savings or long-term investments for their people. Because if you have a bank account, I have 2 bank accounts in Japan. If you hold money every year, they charge you fees, and your interest rate that you earn is 0.000401. That's how much they pay in interest. So they only promote speculation for their people because there is no social security for Japanese people that's valuable. It's all inherently risk. So for them to bump this up to not even 0.5%, to me, it's still, there's so many years of negativity. We're talking about like, I wish I can bring it back, but 2016 was negative. Even before that was 0. They don't.
So you think the yen versus other currencies is going to continue to lose value? That's basically the eternal bet that you're kind of placing.
Oh yeah, there's until Japan starts to sit down and says, "Hey guys, we're going to a 3 or 4 or 5% interest rate. We're going to stop throwing money to." How do I say without saying something bad? We're going to stop giving money to other countries that are warring, which is a large portion of our budget, which makes no sense. They have a population the size of California, But if you look at the, and this is why I follow a global, like a country debt clock. Just to show you guys some perspective. America is the king when it comes to a lot of things in the market. But if you look at the population and what they create, America and China are the biggest in the world. The population, market, what they do. Why is Japan in the top 4? And for what? Look at this. Public debt to GDP, 295%.
Holy smokes.
Yeah, if you start to really break down Japan's economy, it is horrible. Their inflation rate, I think, is at 1.2% or 1.2. So their elderly are dying faster than their children being birthed. So I see that as negative long term. They can't replace their generation.
Yeah, they have a problem with aging population, their birth rates and stuff too. There isn't that like the biggest problem they're having?
Yeah, especially when I've been in Japan for over 8 years, and I tell people, like, if you start to really understand the way they build families, they are better at it in the sense of like staying together as a unit. But the replacement rate is so horrible at it. They've been, I would say, if you compare it to like a third world countries, it's not about the finances. They can replace themselves, have a bunch of children, and then not worry about having the newest cell phone, newest lifestyle thing. Japan focuses on lifestyle too much, which take away that family aspect. The replacement rate doesn't build. So that's why the last year and this year they had a big influx of people from other countries to help boost their population and stuff, because they're better at replacing than Japanese people are. But
yeah, that makes sense.
Yeah, I hope they do. I mean, I don't know. They're not going to fix this problem soon. It's going to get worse. It's going to get
So what do you
Oh,
think? You think they'll go back on the gold standard eventually when all this blows up, or?
you just said the most like lottery winning thing ever. If they went on the gold standard,
That's
gold would,
10,000 gold easy.
yeah, it would blow up precious metals. It would blow up energy. I don't even know what I would say about Bitcoin. A million, because there's too many currency units chasing a limited size of precious metals, like one pool size of silver and gold. I don't know. It would be so outrageous, but I would be happy to be in physical at that point.
Yeah.
Oh man.
I mean, who knows how much money is going to get out of get out of government debt too at that point.
Oh my
Right.
gosh. And then and that's why to me, like when it comes to economics, I in my free time, if I have free time outside the gym, I literally look at charts, study this material, and look at like population rates, which brokers pay the best. And I have a spec on here. I wish I could move my camera, but like I have a swap type that shows me all the brokers, what they're paying. We have Draco. Where everybody? I don't know, man. We usually have like 30 or 40 people on, but it's cool, Draco. Thanks for coming. But to me, it's like when I start looking at these international banks, some banks are paying double what they're doing now. Like I don't. To me, it is bad when the central bank, World Bank, every basic bank is against Japan. They want no love. They're not giving any love.
So you follow currencies as well.
Yep. Yeah, that's how I trade forex and crypto. Like actually, I'll bring up my trading chart right now. Give me a second. Where's my trading chart? Where is it at? I'm on my laptop right now. So actually, laptop's over here, computer's over here and stuff. Where's MetaTrader? Give me a second. I'll show you these rates. They're really scary. Like I tell people, like not they're just scary. It's really bad for people who live in Japan because not just me, other investors see this stuff and they're like, why in the heck would I go buy into Japan? I need to short Japan as much as possible. So if you're a USD JPY, here's our contract right here. Look, this is what the banks are paying us. The banks do not want anybody so they're penalizing you if you're going short Japan, so which means long Japan. They want everyone to go long dollar, short yen. And here's the chart for it. Give me a second. Let's go monthly. Look at the dollar. Like if you go back even from here, from the 2012 low, or even before here, nothing has been benefiting Japan. And if you put it in a dollar perspective, or actually here, like this, so it's about 12 cents a day. So 12 cents for every $100 put in every single day. That's crazy after a couple years. Not even joking. It comes out to a lot.
Yeah.
Control G. And our next payment comes in. Actually, let's go to the hourly. So we just got paid 5 hours ago. So every white line shows us when we get paid.
Oh, that's cool, man. You figured out some a cool little trade there.
We'll see. I mean, it's a little bit different, but I tell people like this is the only way how I learned how to trade. The way I learned how to trade is basically from Peter Schiff. My entire style is just mimicked after him, except for the robots and stuff.
Isn't Peter Schiff just like a long-term buy and hold gold guy? Like I think he has he does international stocks as well, but he's been anti the American economy, I think, for a long time.
Yeah, he's bearish and bullish on other countries. Like I some of his trades, I actually copied a lot of his trades just because I don't see him lose. It's kind of like the Bitcoin guy. You said Michael Saylor?
Michael Saylor, yeah.
Yeah, Saylor, yeah. You follow him. I follow Peter Schiff to down to the T. When he takes a position, he took a position in uranium with the ticker is called UDJ. UDJ. It did a like 4x in a matter of months. I took the exact same trade just because of him. And Peter Schiff is never wrong, in my opinion. When he says that Japan can't manage money, he's right. If it makes sense.
Yeah, I mean, you gotta have that's all macro, right? You gotta know your macroeconomics hard.
Yeah, there's a negative part of it. Like I have my portfolio called Master Money. Inside of it, there are like hundreds of tabs of just how to break down the economy, what a country's doing good and bad. Like,
yeah, there must be so much information out there. What do you think about AI? Like AI starting to trade on their own and stuff.
So I'm happy you brought that up. So right now in 2025, it is not so good. It is because when it comes to them doing data crawlers, like one aspect of AI is gathering information. How do they gather information? So let's make it very easy. Reddit groups like Wall Street Bets. Let's see if you have an AI bot. One aspect of its data collection is just looking at Wall Street Bets because they are a big influential group of buyers. And they're saying, hey, if you have an AI bot on Dogecoin and a group of Wall Street Bets are going to be buying in the Dogecoin, you want that information to see when their orders are being placed.
Yeah.
So one part of the AI issue that I find that is hard is to find information that's not biased. So even for me, when I'm looking at programming, biasness, I even in my own stupid rules of programming, I hate internal biasness. I program robots biasness and it'd be like this. Oh, the markets are bullish. Let's make a robot that's always bullish. And I do that subconsciously. And then when I put it into the charts, oh, is this trading? And then when there's a negative part of the market, I don't understand why it's losing money. That's one part I wish AI can learn better from it. And also the internal programming of it. So when you use like ChatGPT and you ask it to do a task, it has rules that are tier 1 rules within the performance of the code and then tier 2 rules. So the tier 1 rules would be like, so for example, if you wanted to find, to make it easier with cryptocurrency, if you wanted to find certain celebrities that promote whatever coin, you would have that bot do that, but you needed to understand that it can't be biased in liking or disliking. So that's why for me, when it comes to programming, I see it very like as I can program you as a robot like right now live. That's how much detail I put into it. But I think AI in the next couple of years will outperform the average trader because once they get down how to collect information, because they already know how to execute trades, they already know technical analysis, they know fundamental analysis better than most traders. It's just the information gathering is the hardest part because if they can get into what's it called? What is that cryptocurrency they did with Trump coin? If they had the internal access to access Trump coin information, oh my gosh, that tier 1 information, like that Nancy Pelosi, that Congress information.
Yeah.
Oh my gosh, AI would destroy traders if they have that. Oh man.
Yeah, I think there's like ETFs coming out that are mimicking investors, like Pelosi and Bill Ackman and other people like that, mimicking their portfolios and stuff. So it's interesting, man. It's interesting what's going to come about this whole AI thing.
I would say even before I'm 45, like maybe next 5-10 years, AI will have it down. Because as I've seen this so far, because I'm taking college courses right now on AI programming. Because I'm fluent in C, C++, MQL4, MQL5. I'm fluent in 5 languages right now in programming.
Yeah.
As I see it coming out, it will destroy average traders. Because right now, I can flip accounts, and this is from a non-AI perspective. My robots have the intelligence of like a middle schooler. They understand trend. They understand why it lost. It can send me a report why it lost. You can also do that with ChatGPT. Grab your trades, throw into ChatGPT. Why am I losing money? Oh, because your time frame, you enter off the the London or the whatever break. Wait 20 minutes, then enter. Wait for the open candle. Like it can adjust that. But for mine, I can actually see why it's actually doing stupid entries. Why is it not doing 100 entries per contract or something like that? But I think AI is going to destroy the game, and you're actually more early to the game than I expected. You're buying the actual companies.
Yeah, I mean, I don't do trading at all. I'm a long-term investor, so I mean, everyone is buying into the companies if they hold the indexes.
I like that.
So yeah, I mean, I'm just a simple long-term investor, and with a cover call wrapper on it. I just want to get my cash flow every single month, and I want the performance of the stock market in general. I'm happy with that. If I could get a 10 to 14% return on average annually. I know some years are going to be not as good. Some years are going to be average. Some years are going to be rocket. As long as I get my monthly cash flow, I keep reinvesting all, like I pay my bills and I reinvest the rest. That's like my golden rule. That's what I do. And every month I have a little bit more income. Like for the last couple of years now, every single month I have more income the next month. So as long as you just keep buying more and keep reinvesting, keep investing, just growing your net worth and growing your cash flow. That's how I see it.
I'm gonna put this on a to do right now. Look at these AI companies and see how I can get part of them, because
there's a lot of AI ETFs out there with cover calls, even if you want the income. But there's plenty of thematic AI tech ETFs out there. Like even YieldMax has a couple. They have like a tech one and a crypto and a tech one, and they'll just hold those companies. They'll write cover calls on them and just give you the weekly payouts, the weekly premiums. You know what I mean? It's never been easier as an income investor to really invest in whatever you want now. Some do puts, some do calls. I mean, there's no shortage of options out there.
I have this on my to-do list now to check out, because there's so much I gotta get into, because there is a aspect of why I like physical companies. Because what is it? This is a little bit change of topic, but guys, if you're building a social media presence like on YouTube, you get it's kind of like a superpower. You get clout, and you get like not just respect. You get like a whole lot of things when you're building a social media platform. So when I looked at my personal portfolio, it has to be branding, and the other part is have to be you have to have employees. So that's why I look at buying into companies to actually give back to people and build up a foundation of individuals, and not just. I mean, I could just make money and just stay home all day and hit the gym, but I have to do something with people. Like I'm absolutely forced to look at that stuff.
Yeah, that's interesting. It's your conviction, right? That's cool, man. As long as you're not bothering anyone, you're not hurting anyone. What's wrong with that? That's great.
Unless at the gym.
Unless you're at the gym, yeah, exactly. How's the gym going, by the way?
Oh, so yesterday I was sparring. I did 9 rounds of me just taking punches to the stomach, to the head, everything, just defensive fighting. I tell you, like, if you look at my schedule, it is like 8 hours of just investing, charts, analysis, and then 3 to 4, even 5 hours of just gym, and that is the bulk of the day. 2 things that can't be missed.
Man, you're going. I wouldn't be able to do that, man. Like, I'm all achy and pain. Like my rotator cuffs are like on the brink and stuff. So
yeah,
I don't know how you do it, man.
Like after years now of working out, like I take 1 to 2 days off a week sometimes, like sparingly, but I don't get hurt that much anymore. Like I mean, I got a messed up foot from the kicking the bag, but.
So you do like combat, or you do bodybuilding as well, or?
Oh, no bodybuilding, calisthenics, yoga, kickboxing, and boxing classes.
Wow, good for you. Cool.
Yeah, I mean, I tell you, like, to me, that's the fun part, but this part is the analytical part, especially since most of my day is built up on this stuff. That's why I have to study, do YouTube right. It's like being self-employed is way harder than being employed at a job, in my opinion.
Yeah. So how much time do you spend on like your YouTube videos and stuff? That's not your primary way of earning? You do that just for fun?
I wish it was. I would being a full-time YouTuber would actually be really cool. I would actually relax on the other things, but YouTube takes, like, I have on my current schedule. Here's if you saw my clipboard of what to do, I have a daily list of what I have to accomplish in a day. And then I have my weekly ones. So YouTube, I have, so next week I'm building up. So this week was only interviews and editing. So I spend 2 to 3 hours editing videos. So all 8 videos will be fully edited by Saturday, which I'll post next week. I measured my possible income with an average view rate of like $8 for every 1,000 views. So actually, I project my income on YouTube, what it could be possibly, and to see how close I am. This month, I'm doing pretty good. So that's why my last video I knew was going to be like, it's going to get 5,000 views minimum. Posted it correct, have a a CTR of 14%. Now it has 5,700 views, and I'm getting 44 views per. Like I have it all measured out. Like I'm
You
trying
have
to.
it all planned out, yeah.
I'm trying to. I wish I had a bot that can learn YouTube's algorithm. I would. Oh my gosh, you can have any video pop to hit 1 million. Like, and for
Right.
people who don't know about YouTube, YouTube is not just insane income. If you're getting 100,000 views per video, like some of the YouTubers that I've met, they're making $20,000 a month. That can replace so many of my other businesses. I will actually close those down, focus more on YouTube. If it was like if it was that substantial.
Yeah, I mean, yeah, you need the views. You need, like you said, you need the views on YouTube to make your money. And it's tougher than most people think. It's, YouTube is like, it's my gateway, but most of my income comes from other sources related to YouTube. But I do pretty good on YouTube as well, because I have memberships now, and that's why like everyone has memberships, because you don't really make much money off the ads. YouTube takes a lot of that. They take like 45% of it. So it's hard to make money on YouTube unless you're making like you said, like at least 10 to hundreds of thousands of views on each video, and then you can make quite a bit of money just with the volume, right? And if you're cranking out videos every day, you could make a lot of money for sure on YouTube.
What I've seen when it comes like the average income, so if you're having a money related channel, you have like 3,000 subscribers, you should be making $200 to $300 per month. And I have like a chart that I've been creating just for that, so I can plan out my income, base it off of how I can build it, and hit relevant topics. But it's part of my YouTube portfolio. So my goal is to hit $3,000 per month and just set and forget YouTube, and create a separate company that hires individuals just from YouTube income. So I'll build a pyramid of companies just from YouTube.
Okay, I see what you're doing. Okay, interesting. Yeah,
because actually, I'll tell you this not on stream, off stream, about the YouTube direction, which I think is possible. Because if you see my current AdSense or YouTube income, you will see that it is possible within 1 year of this happening. Because I can't wait. But audience, I know you're not there, whatever. This is like the best conversation I had all week. Thank you. So actually, all month.
Oh, I'm happy to hear that, man. That's cool. I hope. It's always fun talking to you. You always have these. I always like hearing what the trader mindset, because it's literally like the opposite mindset. So I'm very curious about it. I want to learn. I want to hear how you guys think, and it's just very interesting to me. And hey, God bless the traders, because if we didn't have the traders, if we didn't have you guys all day looking at charts and getting in and out, we wouldn't have volatility. We wouldn't have anything. And that's how guys like me, boring buy and hold, cover call ETF investors make our money, with those premiums, with those volatility premiums, basically, because we're selling the volatility. That's what we're doing. We're selling the volatility. So yeah, I mean, it's always nice talking to you, and hopefully we could do this again sometime. I don't. Do you have any other like questions from members that you got? Specific ones? No.
Just our conversation alone, we knocked out like everything, especially especially the things about risky investments. We covered that. Some political stuff, not too political. I don't want the YouTube overlords to get mad.
Yeah, it'll get taken down, or you'll get flagged or whatever. Yeah.
That's why I even told them when it comes to certain YouTube topics, I won't even dive deep into it anymore. We can talk about it in the Discord.
Yeah. Okay, so you got your own. Do you have like memberships on YouTube? Do you have like your own Discord and stuff? Okay.
Yeah, I have a Discord. We just give me a second. We'll look at the YouTube perspective thing. We just had 600 people in the Discord, 300 on Telegram. 320 on Telegram, which has been really nice. Thank you, YouTube memberships. I absolutely YouTube's. If you guys want to start a good hustle or side business, do YouTube and connect it with a business.
Yeah,
absolutely. Like YouTube alone is cool, but I connected my software company to YouTube because it makes things so much easier.
Build out a channel, build a following, and then do other wherever it takes you, whatever value you could bring to whatever your channel is about. I mean, that's the cool thing about YouTube. You could literally make videos on whatever the hell you want, as long as it's not, you know, they'll take you down, but you know what I mean, right? So yeah. So listen, it was nice. It was nice catching up, and for sure.
Thank you for coming on, guys. If any questions or comments, you can throw them in the description. I'm sorry, the comment section. I'll get to them. But yeah, thank you for coming on, and I can't wait till we do this again.
See you. Take care, man.
All right, peace. All right, let me give me 1 second.